Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. In the second video today, let's take a look at the Great British Pound. So it's time to update our analysis. If you remember, last week we have talked about the possible bullish reversal because market was coming to some support in the weekly chart. It also corresponds to overall price behavior in euro currency, and we said that probably some pounds up could happen. Theoretically, it's possible to the 37 area. This is 50% resistance that corresponds to the left arm of the weekly potential head and shoulders pattern. But that is what about the longer perspective. So the first stage of this trading plan was based on this free drive pattern. And we said that if you're watching for a take in the long position, you need to keep an eye on the possible free drive, because we have suggested that it's not like down should happen before the reversal will start. And indeed, this has happened very accurately. As you can see, indeed, it's 130, 50 area approximately. The third drive has been completed. It's perfect free drive because you take a look at the matching of the extensions between the drives, bullish divergence, so everything that it should be. And indeed, upward action has started. But currently, guys, as you can see, this upward action is not really very strong and very fast, and it's difficult to treat it as the real upside bullish reversal. This put the shadow on the perspective of this long-term rally, because reaction could be really minor. And today we will get the non-farm payrolls release. So, of course, different situations could happen. Maybe it will some upward acceleration if the data will be poor, or maybe vice versa. But we should be ready for that. And if you have taken the long position with this free drive, it's time to manage your position. So at least move your stop to the break even, and you could even think about taking the half of your profit on this trade and keep the rest for a possible further upward continuation. Because despite that, we have the free drive and we have the weekly hand shoulders. The chance on some downward action here exists. Currently, it's difficult to say whether this will be deep retracement. Maybe market will establish downward action, or it will be just minor pullback, and then market will establish upward action. But some retracement here is very probable due to the patterns that we see right now on intraday charts. The one thing that tells in favor of possible continuation still is that market hasn't completed minor target of the free drive. As you know, the minimum requirements to treat this pattern as a completed is the exceeding of the top between the second and third drive, and it stands right here. It's approximately 133, but market hasn't quite reached it yet. This is the only moment that looks bullish currently, but what we see right now on the 4-hour time frame chart and the hourly chart makes us think that we should be ready for a retracement down. So on the 4-hour time frame chart, guys, we have the same pattern as on the euro currency, and this is godly equal to sell. This pattern itself doesn't mean that this should be the collapse after that. Absolutely not. The minimum target of this pattern is a 3-8 retracement. So maybe market will show just some kind of the ABC direction, pull back here, right back down. But some retracement is possible. Also, take a look here. We have hidden bearish divergence with this pattern, and it means that some dive of the price here is really could happen. Besides, take a careful look at this picture on the daily chart. You could recognize a kind of the hand shoulders. So it could happen that this could become the left shoulder, head. This deep retracement could fall to the right shoulder, and after that, maybe market will reestablish upward action. So even this pattern and even deep retracement will not break the idea of the free drive yet on the daily. So only if market will take it out of these lows and will continue to move lower and its collapse will happen. In this case, yes, we probably should talk about the downward continuation. But Even deep retracement here could match both patterns, satisfy both patterns. And the free drive, it will not break it, and it will let complete the here triple to sell. It's deep retracement. Another signs of the deep retracement that we see, first of all, here is bearish engulfing on the completion point of the AB gold steady pattern right here. And second, if you'll take a look at the hourly chart, you could recognize here hand shoulders. Engulfing pattern takes the shape of the hand shoulders on the hourly chart. You can see left shoulder, head, so the right shoulder. And based on this pattern, this kind of the ABCD pattern, you can see first target was 131.75 approximately. It corresponds to confidence support and agreement area. So maybe retracement will stop here. But next destination point is XOP. It's 1618 extension of the ABCD pattern and corresponds to 131.35 major support. So you can track the chart and you'll see that XOP more corresponds to lows of the potential left arm of the hand shoulders pattern. But anyway, if we will not get this retracement, even minor retracement here, also suggests some pullback. And I think that maybe it makes sense to make some preparations to that, some preparing to non-farm payroll release, especially if you have position started right from here, based on our free drive daily pattern. Not just a suggestion, guys. Of course, you could decide by yourself. So currently, let's see what numbers we will get on non-farm payroll release and see what the price action will follow.